With gold and equities at all-time highs, you may be wondering why Bitcoin is seemingly lagging behind. Here we'll do some data and macroeconomic analysis to simplify and improve your investing with everything you need to know. Today we're going to be doing a macro roundup and discuss potentially why Bitcoin may be lagging behind slightly and where better to start than the Bitcoin relative growth chart we have here on bitcoinmagazinepro.com. So this is just taking a 3-month look at not just Bitcoin but a couple equities in Tesla and Apple, as well as the Dow Jones and the S&P 500 just for some equity baselines. And as we can see, Bitcoin in this black line has underperformed slightly over the past quarter, which obviously isn't ideal. We'd love to see Bitcoin outperform all the time, but realistically it's not been too bad. I think this has been slightly overblown. I think just because we're seeing equities and gold and potentially some other hard assets like silver at all-time highs, that it's maybe just a little annoying, let's be honest, to see Bitcoin not also at all-time highs. So what has actually caused this potentially underperformance in Bitcoin, this shift from a risk-on sentiment we had just a few weeks ago to maybe a little more moderate and calm sentiment that we're seeing in markets today? We would just go to the Treasury yields versus BTC chart we have here, and if I just focus on one of them, just say the 1 year for example, we can see over the past few weeks that this has actually turned to the upside. Yields have started rising across the board pretty much. Now this isn't ideal for bullish Bitcoin circumstances. Really, we'd like to see yields falling because as yields are higher, there's typically a less risk-on sentiment. Investors, specifically in traditional markets, will hold bonds because they have a higher yield. Therefore, they don't need to take on excessive risk and speculate on other assets. So when these are rising, typically it indicates less bullish environment for BTC. We can see as this increased very rapidly, that pretty much coincided with our previous bear cycle. And as this decreased, as the COVID 2020 dump happened, that added to the fuel to really kick off that bull rally. And as this has been decreasing over the past year or so, that was aligning with us reaching a new all-time high. So obviously, as we've seen this have an uptick over the past few weeks, that's maybe indicating a little bit less of a risk-on sentiment, especially if we look at that alongside something like the high yield credit cycles for BTC. Again, similar story. We've seen this turn down slightly over the past few weeks, and this is looking at the risk appetite for corporate bonds, so high yielding, potentially more risky bonds in the US market. So once this is decreasing, again, it indicates a slightly less risk on sentiment. So why are we seeing this? Well, to start off with, we have seen the yield curve inversion revert. Is that the right way to describe it? The 10 and 2-year yield bonds, when they are inverted, so the 2-year yield is higher than the 10-year yield, which doesn't really make any sense if you're holding a treasury for a longer time period. Really, you should be wanting a high yield on that. So when this inverts, it typically indicates less positive macroeconomic conditions, we'll say. And when this reverts, historically, that has actually coincided with less favorable economic conditions and a little bit of a decrease in equity prices. So as this is reverted, again, just a few weeks ago, maybe investors are a little bit more risk averse, just to maybe see how the next few weeks and months play out. So this will definitely be a metric we have to keep an eye on. And all of this has ultimately resulted in the US dollar increasing in strength. And as we typically see an inverse correlation between the DXY, which is the US dollar strength index, and Bitcoin, the fact that this has been rallying incredibly hard potentially gives us some more immediate indication why Bitcoin has struggled over the past few weeks. I mean, I say Bitcoin has struggled. Realistically, we've rallied from the low 50,000s to 68, 69,000 in a very short space of time, and we've just had a few days of retracement. But you know how social media in the crypto space works. As soon as there's a couple down days, everyone's incredibly bearish. So obviously, this has been blown way out of proportion. Realistically, Bitcoin has been holding up absolutely fine. But if we just isolate the DXY and Bitcoin index chart we have here, what we can see is the DXY is actually, if I just reload the chart, the DXY is actually at a pretty interesting point. We've been rallying hard, which is maybe limited Bitcoin's upside potential, but we're now at a point where I think we may be about to see this turnaround. If I just draw on a line pretty much where we are at the DXY there, we can see that this level that we're about at now has been a historic turning point for the DXY, historically acting as resistance and support multiple times in the past few years. So I think, especially considering we've had this long wedging breakout, which is also pretty much aligning with the DXY bounce we've seen recently. It wouldn't surprise me at all if we saw this come back down here and just allow markets to have a little bit more breathing room once again. It's not typical to see Bitcoin just rally for weeks and months non-stop. So these little sideways consolidationary periods are absolutely normal. It just seems, I think, a little worse now because we've had 6+ months or so of pretty boring sideways price action. But if we just go to the TradingView charts here, what we can see is, like we said, equities like the S&P 500 are at all-time highs, but even these have been retracing slightly over the past few days. And again, this is probably just quite normal because if we look at something like the Crosby ratio, which is just a market cycle indicator, which is basically looking for exhaustion to the upside or the downside, this has reached this upper region just as we've started to see a little bit of retracement. And over the past few years, this has been incredibly accurate. Every time we've reached this upper region, we've maybe not had an immediate pullback in price action, but we've at least had like here a little bit of a consolidationary period where we've had a few days or a couple of weeks where prices just again had a chance to reset and have a little breather. So I'm not sure if we'll reach this lower region like we did earlier, well, about a year ago, where the S&P 500 had quite a stark retracement. But if we do reach these lower regions, then it's obviously a good opportunity to potentially accumulate the dip. And this isn't just isolated to the S&P 500. If we go to the gold chart here, we can see a very similar story. We've reached this upper region, so it makes sense that we're seeing markets have a little bit of a cool-off period. Once we see things just run exponentially up to new all-time highs, that can't be sustained forever. So the fact that we're seeing pretty much every market have a little bit of retracement makes sense that Bitcoin isn't having the most positive bullish price action either. And similar for silver, which isn't at a new all-time high, but if we just zoom out on the monthly chart or something, we can see that, again, this is at the highest price it has been in well over a decade. So everything has been running. It's a little bit disappointing that Bitcoin hasn't been running, but again, as Bitcoin is a more speculative asset and is a more risk-on asset, it makes sense. If we go to something like the gold versus Bitcoin correlation, though, one interesting and positive point we are seeing is that this correlation has begun to increase. So potentially, as we're seeing a little bit of uncertainty, not just in the gold markets, as we've had a little bit of retracement, but especially in the equity markets, given the fact we have some geopolitical uncertainties and global tensions and everything else. The fact that we're seeing Bitcoin become more correlated to this global hedge asset is a very positive thing in my mind. If we just zoom out over the past, well, as much data as we have here, really, we can see that Bitcoin typically doesn't have the strongest correlation with gold. The chart's gone a little weird there, but we can see this is actually one of the highest periods of Bitcoin correlation with gold that we've had since Bitcoin's inception. So if this can be sustained and we do have a little bit more of a sustained period of equity drawdowns and uncertainty, then this is a positive indication that hopefully Bitcoin can potentially have a temporary decoupling from more risk on traditional markets that we've usually been correlated to, like the S&P. But realistically, I don't think we should be too bearish, medium to long term. In the short term, it's very difficult to predict, and there's too many other factors that come into play. But if we just look at something like the US M1 versus Bitcoin year-on-year chart, we can see that this US M1, this blue region at the bottom, has actually just turned positive. If I can grab it. There we go. Nearly got it. There we go. It's just turned year-on-year positive for the first time in multiple years. So again, this is giving us some indication that the money printers are turning on. We are seeing some more bullish macroeconomic conditions. And hopefully, as we see some more quantitative easing, as the money floods into the system, we'll see the DXY demand decrease and demand for other assets, hard assets like Bitcoin, continue to increase. And this isn't just limited to the M1 money supply, which is just the cash in circulation. We can also look at the M2 money supply, and it's a similar situation, this blue chart up here, which is the cash in circulation in the US along with cash equivalents. And again, we can see that this is actually beginning to ramp up quite noticeably from a negative period we had during Bitcoin's bear cycle and choppy sideways period to now actually ramping up quite noticeably over the past few months. So if this trend continues, alongside something like the Fed funds target range continuing to decrease, this really sets the stage for much more positive periods of macroeconomic conditions that can hopefully sustain a more positive Bitcoin rally. But another thing, even though we're very much focused on the US, and especially when there's something like the US election coming up in just 11 days' time, which I'm not going to get into the politics side of things, But really, this is kind of, again, leading to some uncertainty. I don't think anyone wants to take too much risk a couple of weeks before a pretty major event. But Bitcoin ultimately is a global asset. So even if we exclude the US, I mean, this does include the US M2 data as well. But if we look at a broad picture to look at the entire globe and their M2 supply year on year, we can see that even though this has had a slight retracement over the past few weeks, which again is leading to this slight contraction and slight aversiveness to risk on environment, that ultimately this isn't something we should be looking at on a daily basis. This is a more macro metric. And as we can see, the trend is still very much to the upside. If we look at any of Bitcoin's previous bull cycles, we had multiple periods where this was decreasing for weeks or months at a time. And this correlated with Bitcoin having some slight pullbacks and bearish price action during bull cycles. So again, this isn't any indication that the bull market is over or we're not going to continue rallying. I think this is just pretty natural retracement, a pretty natural cool off. If we look at just the monthly returns here, we can see that even though people are thinking, oh, Bitcoin's lagging behind, we've not seen some great bullish non-stop price action. If we just look at the year of 2024 returns for gold, which is 33%, the S&P 500, which is 21.5%, Bitcoin is still massively outperforming everything. I think it's just because we have had this boring price action that people are getting a little bit down, but we've had 2 months consecutively a very positive price action. And especially as we're seeing pretty much all macroeconomic factors pointing towards some more positive medium to long-term environments, forward markets, there's no reason to be bearish right now. I do think that we could see potentially a couple more weeks of choppy consolidation, maybe even pullback in the Bitcoin and pretty much all other markets price action. But this is just due to the fact we were a little overextended and there is some uncertainty surrounding the political and global situations. So ultimately, things don't look bad. Things actually look pretty positive for BTC. There is obviously a few factors that don't look ideal, like the treasury yields in reverting, which historically hasn't provided the best conditions for markets. But if we look at pretty much everything else, the DXY resistance, sentiment, of course, has had a little bit of a pause, but typically has been over the past few months on a very positive uptrend. And as well as that, the supply in the money just continuing to massively skyrocket. All of these are very bullish factors for BTC. Also, if you haven't already, please don't forget to like this video, subscribe to the channel and turn on notifications to ensure you're receiving all of our content as soon as it's released. And make sure to check out all the resources we've discussed today, as well as the many more that are all available on BitcoinMagazinePro.com, your number one source for Bitcoin analysis. So just to summarize, we covered a lot of charts today, but gold and equities are both at all-time highs, well, have had a slight retracement over the past couple of days. And with other hard assets like silver rallying to levels that haven't been seen in over a decade, it's a little disappointing to see Bitcoin lagging behind slightly. But realistically, we need to take into account we have run up from the low $50,000 region to near $70,000 in just the past few weeks. So a little cool off period does make sense. But looking at it from a macro perspective, we have seen sentiment become a little less risk on over the past few weeks, specifically in traditional markets. And from that, we've seen the US dollar strength increasing alongside treasury yields, which aren't the most favorable changes we want to see in the macroeconomic conditions for positive BTC price action. And this is all likely due to the sustained outperformance we've seen, as we could see on the TradingView charts and looking at indicators like the Crosby ratio. Everything was quite far extended to the upside. So this little cool off period does make sense. And as well as that, we are seeing a yield curve reversion, which may be giving, again, traditional investors a little bit more of a risk aversion. Political uncertainty with the US elections in just a couple of weeks. Global tensions with potentially World War III, hopefully not, but who knows at the minute, and anything else. I mean, in the minute, it seems like there's so many external factors coming into play. But really, if we just take a look at the data here, it really does help to simplify and clarify the situation. And really, I think a lot of the news that you're seeing, a lot of the stories that are breaking can really be ignored. They'll be reflected in the data that we see. And really, along with that, the choppiness probably will continue for the next few weeks. So really just try and not be spending too much time running over every single chart, looking into the data, reading every single news article. Things medium and long term look very macro bullish for BTC. So even if we do see some volatility, over the next couple of weeks alongside the elections and everything else, things do look positive long term. Just take a data, very simplified approach to your investing and don't get too caught up in the emotions that are currently going on. And hopefully it will improve and clarify your understanding and analysis of the Bitcoin markets. If you like this video, then please visit bitcoinmagazinepro.com, where our analytics help you to cut through the noise to make informed, data-driven decisions about Bitcoin, with over 150 live charts, personalized indicator alerts, in-depth crypto industry reports, API access, and more, all for a fraction of the standard industry price. And let me know what your thoughts are on the current macro conditions for BTC. Do you think, like me, that potentially in the short term it may be hard to gauge, but in the medium and long term things definitely do look positive for BTC? And also let me know what your thoughts are on a little bit more of a laid back approach to the video like I've done today. Not so many cuts and just try to be a bit more authentic and a bit looser with everything. Let me know in the comments below on social media. I look forward to reading and replying to them. Thank you all very much for watching, and I'll see you in the next one.